It's the market sniper. Probably the only country being worse managed than the United Kingdom right now, only, although I will say the United Kingdom's doing its damnedest to catch up, is Germany. That's right. And Germany's been a lengthy one. From Frau Merkel right to the current regime of Bolsheviks or Bolshevik-controlled loons, largely grabbed up and slurped up by the Green Movement with lots of delusions surrounding climate. Yep, it's a problem. It's a real problem. And let's not forget that Germany is the spine of the EU. We will, in fact, be popping over in this video, two potential trades, one on an index, the DAX, and a reminder of our position on a spiller, an absolute thriller, likely to get into a disorderly state for a bit, the Euro Swiss franc. And I think the large reasons behind this, so I'm superimposing a possible, this is guesswork in truth, but the spine of the EU and the underwriting of the euro is Germany. Have no other illusion. And in fact, we probably need to go to elongated muskiness's tweet, which in of itself, the fact that he is tweeting this at this time turns into a very mercurial, moving everybody's gaze in a certain direction, which tells me, as someone who's inherently suspicious of both Musk and how things are stage managed, that there is items and events afoot for the Euro Swiss franc, and it may well have a German origin. Of course, the Ukrainian-Russian war and the energy policy will be touched on in all of this, but why is Elongated suddenly talking about this? Why is he suddenly woken up to the fact that Germany is the, by nation state, not by citizen population numbers necessarily. Some might say Sweden have very, very few, have only 10 million population, so you can almost multiply that number by 8. So it's not by population, but certainly by nation commitment size, which is also going to be a reflection of the greater GDP. Why is Germany paying so much towards the euro experiment? It seems like Elon's just discovering this. Of course, the withdrawal of the United Kingdom as a substantial contributor, which was sitting in between Germany and France. Many would say, well, it was slightly below France. France gets the agricultural rebate that is huge. The net contribution, Britain was second. So actually Brexit was very much a case of no longer the largesse, the scale of the largesse. That's why it was such a brutal, contemptuous, lengthy, drawn out, make it hard for him to leave divorce, so that they had to keep contributing during the in-betweener phase, which eventually got resolved. But anyway, you can see it here. There's actually only a handful of net contributors. It's Germany, France, the Netherlands, Italy. I'm surprised a little bit by Italy, but it's floundered in the euro. It's been a terrible thing for Italy. Sweden, Denmark, Austria, Finland, and Ireland. Those are very small contributions. The two small islands barely take. They're almost a neutral hold. They're in there. They take a tiny bit. Cyprus is not much more than 1 million. Probably nowadays a little more, because they haven't done a census in ages, and there's been a lot of people moving there, including Israelis. Then you get into the Eastern Europe, Slovenia and Poland. Wow, massive recipient. Of course, Greece, because of the events, big recipient. But why the focus now by Elon? It almost seems like he's this mercurial Midas touch. He just happens to touch on cornerstone issues just before they're about to explode. This situation has existed since the EU was created. It is a transfer mechanism from wealthy states to less wealthy states. It is social welfare. It's social welfare instead of for citizens, but for nation states. That's what it was. And in the meantime, they've set about the spinal column of the EU experiment, for which it is and was. Don't forget Goldman Sachs and their dirty off-balance sheet tricks that got the Greeks into the euro, which should never have been included, which is one of the biggest drainers on the euro. All all the skullduggery in the creation of this experiment, which was destined to fail. There was a political solution, all in the name of never again a war. Nonsense, nonsense, absolute nonsense. By being an economic bloc doesn't mean you can't get into conflicts again. But, you know, whatever, let's leave that one now. But I have a feeling that Germany is in a real state of tipping point in terms of its ability to continue holding up this facade of a building for which there is very little behind. And it's a massive cost. So there's that. And don't forget, we're coming onto these topics and we're speculating on these topics because it is, again, me calling the euro Swiss franc. Now, I want to make it clear. We called it in 2009 before the original EU crisis. That was a far bigger macro setup and a much bigger fall. This is a 12-hour chart. It is not a weekly or a monthly chart setup that we did in our original calls in 2009 and again in 2015 for the peg fail. So we have history with this one, and whenever we've gone on YouTube, funny enough, on this one, we, you know, the big calls on the macro time frames, and we don't do, you know, half-hour, 1-hour trades. We've got 100% record. It's 2 out of 2. It's not a big sample. And we're here again, and we were expecting it to spill. And the question was, we don't always get it right on our first entry idea. So it's also important to point this out. In a trade idea, you can have multiple entries before you get the moment you want. So we've not been... this is our second spell of entries. We originally looked at this and this smaller zone and asked the question, is that the break? That turned out not to be the case, and it got rallied. This is part of a kind of managing the timing. So it goes back up and it makes a larger third impulse, which sees us then redraw it. So the idea fundamentally is correct. However, the first entry is a fail. So that's quite important to also lay down the definitions. But this is your 3 impulse upside downside HVF. So instead of having the hard sell there, it ends up a slightly slower momentum sell. We prefer it if it actually spills. And then you're topped out here. You then hung about a while here, and then you've come quite hard down again here. And this is finally triggered. And as soon as you trigger, it's called the break and feign, you pull back. It's quite typical of the structure. You pull back and you revert. These are great re-entries. So I did something on the crypto sniper around probabilities, and it was involving the 3 doors question. I'm just going to do it very quickly again, not in the same detail, but if you're a game show host, I had a very smart woman on, and there's 3 doors, one of which has your dream car or some item you would like. The rest are booby prizes of forms, and you guess number 1. And I want to make this point on both channels because it's quite an important one. There's 3 doors, 2 and 3, and the game show host then gives you a dilemma, and he goes, you guessed number 1, so you are here, you went, okay, I'm doing 1, woohoo, I think my dream car is on number 1. And he goes, allow me to show you. And he goes, as someone who knows what's behind the doors, he shows you a goat or the booby prize in 3. So 2 doors are booby prizes, 1 is your car. You've guessed number 1, and you now get a moment to choose again. That's where you say you can stay on number 1, or you can change and move to 2. You wouldn't choose 3 because it's been revealed to be the booby prize. So when you first guessed, you had a 1 in 3 chance, chose 1. Now you've had 1 outed, and now you're in a situation where you can choose to change. Now the question becomes, do you change or does it not matter? Because you've chosen 1, there's only 2 doors that actually can have the idealized one, and you've got one of them because he's revealed that as a goat, and not your door yet, although it can still be a goat. When you chose, the original probabilities were 1 in 3, Greek 3. Now you're in a situation that one of the doors has been revealed. So you have additional information. And the key element here is, and it helps when you look at this in a far bigger number scaled way. What should you do? Do you stand, or does it not matter? Which many of you will be thinking, and when first confronted with this I was thinking, or do you switch to door number 2? And it's not also about this particular appearance in the game show. It's about not and the outcome here. It's what gives you the highest probability, even if wrong and not working in this instance, that if presented with the situation many times over the longer run, would you win more doing one particular activity, or are they both equally random and it's going to trend to 50%? And the key answer is actually you switch. Because when you guessed, you had a 1 in 3 chance, and that remains your chance. The fact that you've had some information given to you, it was obvious that you wouldn't have been able to pick both goats, both booby prizes. You've only got one choice. So your odds were 1 in 3, and that's what you chose. Now you know 3 is eliminated. You know not to choose 3. You should actually switch. And to those that think, no, Francis, you've got this wrong. You should have stayed, or it doesn't matter. It's the same as you are. Let's take it up by numbers and clarify this a bit further. Imagine there are 52 cards in a pack, which there always are. I ask you to pull the ace of spades, and I give you the whole pack there. There it is, all cards, and I say, you have one shot at this, pull the ace of spades. You grab a card and you have less than 2% chance. Why? Because there's 52 cards. So you double that, it's about 140, or about 1.9 and some decimals chance of actually pulling the ace of spades. You're holding your card. I then take the remaining 51 cards. Yep. And I go through 50 of them and I eliminate all 50. I show you each one. 3 of diamonds, 9 of clubs, blah, 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 out, out, out. I do this with 50 cards, and I leave the other card down. You have your card, or you have the card that I'm off, left you on the table. And I say, 50 cards that I've removed of the remaining 51 are all not the ace of spades. So I show you 50 goats, booby prizes, and out. The question is, now you can see you should take the other card, because actually your original guess was only less than 2% on the first card. But you know now that you're sitting with a much higher possibility on the final one being correct. So the answer is a switch. It's just less obvious when you reduce that number from 50. Down, down, and down. And that's something that many of you will battle with, and some of you will go away. I think Francis has pulled a Jedi mind trick on me here. And I need to think that one through again and again, and do it for ever reducing numbers until you have 3 numbers, chosen one, only 2 options left. So the answer is always to switch. And that won't necessarily guarantee you the win. This is probabilities and possibilities. It's mathematics in trading. What it will do on that particular instance is not give you a slightly higher chance of winning. The 1 in 3 still could have been right. 1 in 3 comes up plenty times. You know, you play that dart on the dartboard with the 3 stripes at the angled colors, and you've got to throw a color. You probably haven't seen that one in a while. I think they were around a long time ago at the fairs. But they do come up. But the actual choice is to change. And this is the benefit of probability methodology over a long term, because you could switch and be wrong and the original choice was right in an individual instance, but over the long term you make more money, get more perfect ideal choice of cars, etc., win the gifts more often by doing the correct behavior. And many people don't even see that they're being offered this question in trading. And this is the key rules. We trade continuation. That is a big sell-off that last sell-off for this 12-hour time frame. By the way, we're not looking at the weekly and the monthly now. We're at a slightly lower time frame, but the rules still hold. You've essentially got a holding pattern over here in and around the key level of 94, the round number of 94. That's where the market has agreed to oscillate around in the structure. It's a holding pen until the next crisis for the more flawed nation, which is Europe, versus the Swiss franc. And as a result, we buy a short generally, and technically, so the fundamental facts that the one is more flawed than the other, and it's a welfare state amongst nation states, whilst the other isn't, is a fundamental, but it is also represented in the chart and how it behaves, that it is a systemically selling off to a landlocked nation that is neutral, that sits in the core of Europe. And as a result, you should bias net short. Technically and fundamentally, it's proven in the charts. And the charts is the proof that the fundamental view is correct. So in this instance, on a slower and lower time frame, it's actually a bit faster when you're on the lower time frames, but 12 hours still pretty big. This is a triggering event, and you have spilled, and you're moving down. And when you're talking about Eurozone problems and issues, you have to look at VW. It's very high energy costs, cutting plants in its nation, first time ever in its own country, etc., etc. There's bad news. So I'm throwing in narrative and technical assessments in here because people like the story. I trade the chart, I get the story later, but I like to speculate on the driver behind what might be that story. And for me, I'm speculating it's the collapse of Germany, because we've had high-profile things such as VW's predicament. By the way, a lot of the big car makers are now trading, not just VW, BMW, Mercedes-Benz, below their net asset value, which means people don't value their cash. They think they're going to burn more of that cash and continue to reduce it, and that the outlook is grim. China's making great cars now, BYD. I see it here in South Africa more than I see it in America. Possibly because of the BRICS relationship, possibly because there might be less money here in South Africa. Really quality Chinese cars. They're no-name brands. They're brand new. We don't know. They have no history as far as we're concerned, but actually the quality and the designs are impressive, and the value, the warranties, it's kind of like Kia and Hyundai, huge warranties. People are actually buying them, and I expect this to continue. So there's a lot of competition, and of course the battery cars haven't worked out that great in terms of value. We spoke of Porsche Taycans and their resale value and the cost of replacing a battery when they no longer are getting the range that they're supposed to. Anyway, they're better experts on the battery tech fundamentals than myself, so I'm going to stay in my lane here and just say this is a triggering event for a downsize move, and I would imagine you to get an 8 valuation at some point. We do typically have the break and feign back in stage. We then have the first interim run, which is still to be done and is at 92757. Normally you'll get a reaction there, and then we have a much bigger run that often takes out the second interim and then a capitulation here. So somewhere we're going to have the capitulation stage, which is very profitable. That's when you actually make your money. You're inching into money at the moment. You're not riding home to mum about being a millionaire and how smart you are, but that tends to come when you capitulate or you melt up in bullish setups. So that's the vibe I'm getting out of the Euro Swiss franc. And then we look at and this is community driven inquiry, which is the value of having so many people mining the theme and looking at other things. I didn't spot this at all. It's one of our members who was saying, well, what about if Germany's being weak? How's that stock market looking at? Don't forget the currency isn't great. So for the stock market to go down in a weakening currency tells you it could be in quite bad shape. And you have this. as a head and shoulder. You could also draw it like this and say you broke here and then you reverted back up. The stop on head and shoulders, the failure point is the high point. So this doesn't change anything. This is just a reversion after a triggering event. You actually had another triggering event over here and you had a smaller reversion, and then you had another minor triggering event and an even smaller reversion. So you are doing a descending triangle here. Excuse me. Since this initial 19,000, law of round numbers, we expect that to be the key level of significance. You'd expect a lot of derivatives and pegging to be taking place at round numbers. So 19,000 ever lowering, so we can extend our descending triangle into that entire structure. And you're getting bought back up and defended, bought back up and defended, bought back up and defended, and now you're spilling, and it's not clear whether the buyback is coming now. Now, this isn't the most huge head and shoulders. We've said again, and I repeat it again, that this is kind of proportionate to the euro Swiss franc. It's pointing to somewhat of a spill to below possibly 0.89s on the euro Swiss franc. It is not when I was in 2009 and it was at 150 and I was saying this thing is going 120s and lower and possibly could overperform and do lower than a single one. Break parity. That's a macro call on a much bigger time frame, and it's an epic fail. So I'm not calling an extreme crisis, but I'm calling a period of pretty medium severity softness potentially. Now I would prefer, because equities in an inflation environment still generally grind up, I prefer the euro Swiss franc as the trade personally. It's a inverted HVF, which I have more confidence in than head and shoulders, but head and shoulders work. And the other thing about head and shoulders is the target doesn't have to be the end. Overperformance is possible. So even though this is a 4-hour time frame and it's only 18.3 from a level of around 19, so it's far from wow, epic crash, but it's quite common that you might rally for a bit, but then you go lower. You only have to look at our calls on Pfizer to see how much lower it is than its head and shoulder target in its ongoing demise, which we all hope for. I hope it's being sued to absolute shreds by millions of people. But you know, that's just me and possibly many of you as well. But you know, so it goes on. So head and shoulders often turns. Other charts that we've done on this also point to the possibility that this could turn further than just the head and shoulder. While I'm here, let's just highlight something Doomberg was sharing, and I agree with this. One of the greatest blunders of the past quarter century was the nixing of nuclear power in Germany and the winding down of that. Boy, oh boy, oh boy, what a dumb move. And you've got to understand, this started under Merkel. It was already coming off from 1987, but not meaningfully, but a real capitulation. A lot of that had to do with the Fukushima events. It was a terrible decision. I remember when it was made, it was under Merkel, and she's absolutely caused mayhem on the inflation and destroying manufacturing base due to energy costs. It was an outrage. It was the politicians have brought this, but they will blame their citizens and they will say we have to tax you more and do this and do that and all the other things that psychopathic Bolshevik governments tend to do. I also want to show you the DAX on a bigger time frame that I've annotated a little bit. So our tiny little head and shoulders is in there. You can see our little neckline in there. And that's actually it shows the 4 hour for what it is, because we're now up on a weekly. And the point I'm illustrating here is that you are actually in a very, very big rising wedge. In fact, just the pink rising wedge is a big rising wedge, and we talk about the three impulses in a rising wedge, the sell-offs that would have been there, and then up, and you're now in a micro head and shoulder here, don't forget, at the top of a 3 in a rising wedge. So I want to add to the potential for real sell-offs in this rising wedge on the DAX in terms of German corporations and their ability to perform. You have a company like VW go down, a lot of parts makers, a lot of small businesses that do business with the auto industry, doing various things. You know, not everything's made in the VW factory. The glass isn't made, the rubber isn't made, you know. A lot of things get done by specialist service providers to the industry. So there's the pink draw, the transgender pink, and they are big into the cultural Marxism there, and the Greens and all of that. It's a complete ESG BlackRock. They've made it the vanguard of nuttery in most cases. And by the way, that's not an attack on German people. It's a captured situation, guys. You and I know that. Here was a big impulse. You've got a second impulse here, and that will do Greek too. And then you have this entire squeeze that is actually in the lower half of the blue rising wedge that is actually fractalizing into a smaller 3 of its own, which I've just covered in the pink version. So there is scope for a real DAX collapse. The ability to make profits, plus the draconian reach for higher taxation, the cost of hiring people, the various things. They're very much in the Keir Starmer grain of, you know, it's very hard to fire, etc., etc. So social welfare statism for Germany in its citizens, as well as making it the fulcrum and the spine of a Euro social welfare state, where not only do they transfer to all these immigrants that they've absolutely have pushed in to the highest degree with multitudes of kids, and many of them on the welfare state to a far higher degree than working Germans. So they've got this welfarism at the consumer level. They're also the backer of the nation state welfarism, which is how you destroy the might of Germany and the culture of Germany, which the Khazarian Bolsheviks always wanted to do. And they've mind programmed them into all elements of the wokeism, the transgenderism, the green gender, all of this nonsense into the hilt, and you have the politicians that go with that, and the DAX could be in serious trouble. It wouldn't be impossible in a demand-destroying event at a global level that could actually first start with Germany. You could have this breakdown and do this, and then we have a more US-related collapse, and you could have an even a second round collapse, and you could end up with a 5-wave that could bring you quite some way down. So I leave that out there, and that probably could apply also for the currencies, although eventually the Swiss will start to feel a bit awkward and start cutting rates and trying to avoid too much money. And what do people do when countries and currencies collapse? They move their resources out. They move it into something else. What would that be? Well, they're not going to the dollar on the other side of the planet. They go into Switzerland. They go into Swiss banks, Swiss bank accounts, Swiss asset managers. They move their resources and their currency out there. So that is the potential downside of the DAX on a weekly scale, for which the head and shoulder I just showed you on the 4-hourly here may be a fractal of something far bigger that runs down, but that doesn't mean it has to be. And remember, on a bigger time frame, this can take a long time. So you could get that breakdown, you could actually make our target, but then you could churn for 4 or 5 months at a lower level, not running this high, and then suddenly have a huge spill again. So it's not something I can put a time frame to, but I am warning that any sell-off out of this could trigger a contagion of far bigger patterns and structures to the downside, and we are seeing the concern for all of this already reflecting in the currency markets, which brings us back to the euro, Swiss franc, and a devaluation there. I'll take you up a little bit of time frames just to remind you some of what's gone on the euro, Swiss franc in the history. This is something you wanted to have biased all the way down. This was our 2009 December call on that inverted HVF. We did a peg fail call. You traded, I think you traded just about parity there. You broke the parity there. They then did, hey, we got to stop this. This was the whole put the cork back in, put the genie back in the bottle stage, where it only managed to do a technical touch once at the 120 that it fell before going into ever more broadening technical structures which point to losses. So actually, since the subprime crash events, which by the way also polluted Swiss banks and did great damage to the Swiss, UBS, Credit Suisse were damaged immensely. It wasn't just German banks and French banks, BNP Paribas and Commerzbank and Deutsche Bank, that got hammered with that. But you can still see that this is been a bit of a one-way train. You had quite an extensive rally here, and our opinion is you gave it up violently, and you're now in a continuation to make new lows. So when we were up top here, you were at the 150 level, and at one point the Swiss franc was significantly weaker than the euro. The euro was 1.7 to the Swiss franc. You can see it up top here, in and around, not quite. Now it's almost going completely the other way around, and you're going to not only fall below parity again, well, you are already below parity at the moment, but you're going to fall significantly below the 0.9, and that could have contagion further to the downside. And that just has me wondering, what's going to be the driver? We guess at the story. The technicals are actually more assured than the story. Could be anything. Could be an increase in hostilities between Ukraine, Russia, and the West, and Germany's caught in the middle again. It could be any number, and your guess will be as good as mine if you do any geopolitics. But the energy decisions were atrocious, were absolutely atrocious across all administrations. And this is key, and we are watching, unfortunately, the decline of one of the best engineering nations that made great scientists, great engineers, and manufacturing. Respect actually from me to the German people themselves for their industry, hard work, and attempt to make quality products in an environment where their government has been entirely captured, entirely programmed to do destructive policies, and we're watching a good nation state be destroyed. But the problem is also everything that has hung off that state, which is actually all of Western Europe, which brings me all the way back to a very unpopular sentiment that I give that says, leave. Yep, you don't like it. Your kids are at school. Leave Germany, leave the UK, leave Western Europe, leave Western Europe, leave America, in fact, leave the decline of the West. It's coming, it's programmed, it is a controlled demolition of intent, and you will be rinsed repeatedly. We recently saw a tweet with the judge reading out a 20-month custodial sentence for a British person that highlighted that immigrants are coming mainly for the money and the welfare state and are committing crimes, raping, etc., locals. Now, I imagine there's a lot of Germans that feel that way, but aren't allowed to say it. A lot of other English. 20 months custodial sentence, who actually pleaded guilty to the fact that he wrote the tweet. That is unfathomable and unbelievable. You're watching 1984, where truth is treason. Truth is a crime, and you're watching these judges lay it down upon you for challenging the narrative. And there was a fascinating ChatGPT where a young lady was doing one of these TikToks, and she said, if you wished to, and you're satanic, and you wish to destroy a nation state and seize all of the mechanisms and come to power and control everything, how would you go about it? And literally it said it would create guilt, bend history, make it illegal to question, and it started running off, and it literally is like reading a summary of the protocols of the elders of Zion, or exactly what has transpired. You dilute the bloodlines, you do everything, etc., etc. You criminalize, and this is where we're at. Truth is crime. And that's unfortunately a state of affairs, and we can only decide what to do with it. Better to leave the most draconian places, because even, let me just warn, AI is the precursor. If you think it gets better and there'll be a pushback, and you're encouraged by Trump, for example, in America, and you're just saying, we just need our Trump in America, in the UK or Germany, let me just tell you, you're deluded. The AI generation is pre-crime. It is the most monitoring, surveillance-orientated system of incredible computer power. that the fascist corporate oligarchy, in combination with public-private relationships of the mercantilist people classes that are the tertiary extractors of this world, have put together with your tax money that you're paying for essentially a prison. And pre-crime is a thing. The fact that you are potentially dangerous for your thoughts, thought crime, pre-crime. Go and revisit 1984. Eventually, you might not even have to write it down on X and expose it. Any actions or activities that mean you might be predisposed to thinking that could actually be criminal. And you're thinking, nah, come on. I'm afraid to say, as long as they are being allowed to do this, they are emboldened and they will continue and get ever more aggressive. And this is where you're at. The decline of Western Europe, the decline of the West as a whole. Unfortunately, Europe is at the vanguard of that, as is UK, by the way. So the example I mentioned is the UK. Trade it, build wealth, be wary. Share your thoughts very carefully from safe destinations would be my counsel to you. And I'm very glad not to be in the UK anymore. And I made the move, and my father was British, and my mum is French. I'm glad not to be in any of those nation states. And the third world that we used to look down on, nation states that are a little bit more less inclined to this cultural Marxism and the acceleration thereof, are actually better places to consider and will fare better out of any circumstances pertaining to the wealth collapse in the Western Europe. Anyway, that's an unpopular thought, but it is one I will leave you with. So Euro Swiss franc to make new lows. Germany is in a real state of decline. Automotive is in a real problem. The devaluation on cars that have been bought is getting steep, even on exotics that are well sought after and potentially undersupplied. I predict a difficult time for car makers generally, a specifically difficult time for German car makers, and a general manufacturing decline. Germany, I think, is deeply in recession. I'm not sure if it's even acknowledged or not at this point. It possibly is in Germany. I don't know whether their position is in America, but you should watch out. Anyway, all this said and done, you can profit from the decline in these assets as what's the word? As, I don't want to say parasitic, but as someone who can benefit out of something that is declining, that is noting it's almost like vulture-esque. But the truth of the matter is that will happen anyway, whether you are participating or not. And you owe it to yourself and the people around you to show that higher mental fortitude, people that understands the probability of what I was describing in that system, why you must just do the right probability things on balance in most situations on an ongoing basis. You will be a lot better off for it, and you will compound those micro gains over the people that don't, is by taking the right action. If something is to fall, let's sell it short. If something's to go up, let's buy it. Let's avoid the morality of markets and all of that, and let's also position where we can preserve that wealth, where unrealized capital gains are less likely to be brought in any due course. And the realm of tokenization, digitization, and the cultural Marxism expansion that we're all facing will take a little longer to arrive than it is at the vanguards of Germany, the UK, and other Western European nation states. Okay, till next time, let's see how our Euro Swiss franc short trade goes. Let's see. Oh, by the way, don't forget this. If you want to understand HVF method a little more, right below is a link. You get a free course with a less than 5-minute video every day for a week, giving you a quick snapshot of an idea and a concept. And it builds on that probability. It builds on asymmetric reward for tight risk. This is how you position, and you still lose, but with a probability of outcome that is disproportionate to the risk-reward ratio that over the long time. So it's not about any one trade, it's about a process of trading as a methodology that builds you wealth in reset times. That is available. Also, can I say, thank you very much. We are almost 75,000 subscribers. Can you believe that? We're almost 75,000 subscribers. I began in 2009 this channel, and that means it is going on 13 years old, and we're almost 3/4 of the way to 100,000. By the way, some of you are being unsubscribed, and a number have commented on that in the comments. So make sure you get notifications for these videos and a lot more by hitting the subscribe button again, even if you thought you were, and hit the bell and go always. This way you will get all our stuff and the update on the Euro Swiss franc trade and what goes on with the DAX and many other interesting potential possibilities as they unfold. Until next time, catch you later, guys. Thanks for watching.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.